economic sensitivity, growth concerns, there's so many things and so much of it is centered around China. Is Alibaba going to show us a little bit more into what's going on over there?
There are so many things. I mean, all of this Chinese bunch of stocks, Baidu, Tencent, Alibaba, all have been really weighing down. I mean, Baba's down 16% just from their May high. So it's been a pretty rough couple of months for Alibaba. So Landon, what are you seeing in your purchase intent mentions?
Well, first we got to go through all kinds of stuff with Alibaba, right? I mean, we are English speaking only as far as the data that we collect. So obviously that's huge when it comes to Alibaba. I think about 90% of their revenue comes from China. So what we can measure is about 10%, but historically it's been actually a pretty good bellwether for what's going on with the company. It's one of our highest rated confidence companies. So it's been doing pretty well for us as far as trading and making money. And when we look at purchase intent, it is a fantastic trajectory. It's at all-time highs now, doing extremely well, even higher than last year's double 11 day, November 11th. So they're doing really well. This quarter is the highest quarter that we've got on record, and purchase intent's trending higher. So the current quarter, not the one that's being reported, but the current quarter is actually on pace to be even higher. So purchase intent is doing extremely well. And as you mentioned, Jenny, stocks pulled back quite a bit. So this could be a good buying opportunity in Baba.
Landon, is this so many of these names, and including some of the casino stocks, are really measurements of the Chinese economy, right? Is this one of those ways to play a potential someday down the road China recovery?
I think so. And, you can see, if you look at the market maker move, I think it's about a 5% expected move. And it's been up and down 4% yesterday and today, just based on trade talk. So you can see just how important that is. That's massive. So, yes, I do think that this is a overall Chinese play. I mean, this is basically Amazon over there. The only thing, one of the big differences is, though, that they've got a PE ratio about 40% less than Amazon.
Right.
So
4.7.
Yeah, that's attractive. That is attractive. And they're, obviously they're a little bit behind as far as like cloud computing and things like that. They're getting into that, and they're growing that. So that's very attractive to investors, whereas Amazon's been in that game for quite a while. But, as far as revenue goes, last quarter they had a 51% year-over-year growth. It's, it matches up really well with our purchase intent. And like I said, purchase intent at all-time highs, looking very strong.
Yeah, and we talked a little bit about Macy's yesterday. Macy's, of course, being in a spot where, the changing environment is not benefiting them. Baba's well positioned for this move to e-commerce and this move towards getting things there quick. I mean, like you said, this is the Amazon counterpart in that area. We saw one of its competitors, JD.com, basically blow estimates out of the water earlier this week. And so there's a lot of things you're looking at this where the company-specific news is really strong, but there's still that backdrop of the overall Chinese economy, the tensions with the United States that have seriously weighed on this company. How do you factor that in, Landon?
That's tough. Honestly, that's not my job. My job is to tell you that what we can measure is at all-time highs and trending higher. So all that other stuff, I'm going to leave that up to Kevin.
Whoa.
I mean, you mentioned they're like an Amazon, though, but they haven't performed like Amazon, and people surely do not tweet about them like they do with Amazon. So our first tweet says, no doubt JD.com is more execution-based than Alibaba, which I own too. Huawei or ByteDance, but I continue to be optimistic about JD.com's tech capabilities. I doubt they have a problem attracting talent with such an R&D budget. Okay, so this is comparing mostly to JD.com, but JD.com had incredible earnings. They soared after earnings. Could we be seeing this with Alibaba?
Hey, listen, I think the best information we can take on a sector of stocks is to look at the early earnings, right? I mean, why is the whole retail sector selling off because of
the one pocket of it?
Well, right, but because of Macy's earnings, right? Mm-hmm. Look at all the retailers that are selling off because of that. This is what we do. We compare companies. JD.com had a great earnings release and a great report, and connecting some dots there. People probably are thinking that Alibaba may do the same.
Well, and we talked about Facebook. There were so many regulatory concerns surrounding Facebook. There were so many things that told you that, Facebook's got all these hurdles that they got to climb over, and then you get the results, and they continue to show strong results.
Right.
And you talked about that the whole time, Kevin, about, hey, behind the scenes, this company's still executing really well. There's just this narrative around it that's pushing the stock down. A lot of times that's an opportunity. It certainly was in a Facebook. It hasn't quite been that yet for an Alibaba or a Baidu. But Landon, coming back to your data here, it's not a whole lot that you see these massive companies with this consistent of growth. You don't see the stock really get below that line that often, at least I don't. So that divergence, while you did do the disclaimer for just being the English speaking portion, and we know the overhang, that divergence seems pretty meaningful though.
I would agree, and to Kevin's point, there are going to be some pretty high expectations just from what JD did, and so that is a little bit of a concern. Like, some of our best calls have come when a company has totally blown it in a sector and it pulls the whole sector down, and we're bullish. But this isn't the case. We kind of agree with the earlier earnings with their competitor, JD.com. So we're very bullish on the data around Alibaba. I'm not sure what the market's going to expect, because they've seen that really good earnings come in, and over the last year they've been growing so much. So I don't think that, even if we knew for sure that this was going to be the highest revenue quarter on record, I don't know if that would surprise the market. So predicting how analysts and investors are going to react to an earnings report are a little bit more difficult. But I can say that as far as our data is concerned, with all the disclaimers, it's looking really strong.
Yeah, so I think that's a good place to end it. But just to kind of sum it up then and make sure I'm understanding what you're saying, Landon, what you guys are seeing with your data points to all great stuff. And if this was in a vacuum on its own, this is what you want to see. But because of all that other stuff that surrounds it, the fact that it's a smaller sample size of their revenue, maybe you guys would, if you had to say something bullish, but it'd be very cautious with an asterisk.
I think so. Absolutely, you nailed it. Bullish, cautious with a lot of asterisks, and even if it wasn't for the sample size, just the trade talks in general. I mean, again, that 5% market maker move, and it's been up and down 4% today and yesterday. That says a lot about how important these trade talks are. So there's a lot going into this stock. What we can see is bullish.